All right, welcome everyone to our weekly FX recap. My name is Jose Ricardo Jaen, and directly from Dubrovnik in Croatia, we're going to go over the levels. We're going to use pivot points thanks to our friends at Sala Para Traders. We're going to take a look at the monthly outlook. Let's see what we are, where we're heading. What's the market telling you as far as the charts go? And we're going to talk about a little bit. Ideas, where to go, what's going to happen, and what to expect or not. Okay, so as usual, please keep in mind that all the content produced here is for educational purposes only. It does not constitute an offer for you to sell or buy any electronic asset class. Okay, and never forget that past performance does not guarantee future performance. All right, okay, let's go. Let's just jump directly to our charts. Let's see what we have. Okay, I was recording in Spanish. Now let's start with the euro versus the US dollar. ING is saying that they keep their neutral position, but they are talking about a acceleration in the sell pressure if we have a close and open below 113.01. Now, if you take this, we don't need to be a genius to understand that this is a bearish trend. What to expect? Let's say Monday or during the Asian opening, we have a correction. Shouldn't be more than 40 pips. I don't expect anything to change in the outlook as far as the Italian budget to change. They just don't want to understand what's going on. They think that what I see is that they're taking advantage of the mess between the EU and the United Kingdom to see if the European Commission will be flexible. And there's no reason to be flexible at all. It's not only the Italian budget; it's a lot of the anti-immigration narrative, and it's going to affect the euro one way or another, like it or not. Plus, you have the lack of growth and the lack of inflation, so it's very challenging. So any appreciation in the euro dollar, just be aware that it's dollar weakness and not euro strength. And we can talk all day long about the U.S. problems, the U.S. Trade deficit, trade wars, all you want, but still there's growth. And there's a better outlook on inflation in the U.S. than in the Eurozone. Just keep that in mind. Now, Bank of America, Merrill Lynch at the beginning of the year, they were calling 110. They're happy campers. The first 3 months of the year, multiple investment banks were correct on all the way to 125. So that's not a surprise. What is going to happen next? If you see, we do see on the table 112.30. But if you look, if you have a long-term chart. Let's take a look at this long-term chart real quick. Long-term chart, you can see this. There's a massive pressure here, and there's now we can translate this into a pin bar. There's a massive rejection to almost 170 pips. There's no intention from the smart money to see the euro above 115, and this is something that you must consider. In the long-term outlook, if you use trend Fibonacci, you can see that one way or another, we're heading to touch at least once 61.8%, 118.85. So that rest assured, 112 is on the table. Let's continue with the pound against right here, pound against the US dollar. There are some wires you can check on the search section on Twitter. They're talking that Brussels already denied May's plan as far as the deal, and there is also a list of key players that are ready to resign. There is the fight between the Boris and the Johnson brothers, Boris versus Joe. Lots of drama. What is going to happen is about to unfold. But one of the notes, we take a look here. If you were to expect an upside here, all the way 47 pips, maybe because of the volatility of the Great British Pound, we cannot deny maybe something here, all the way here, 93 pips, but still selling rallies for the pound against the US dollars. What I was about to say, EFXdata.com, they have their comments and basically say if there's a no deal on the table, and suddenly in the last 2 weeks, Prime Minister Theresa May changed her mind as far as deciding not to actually have a deal. She decided that it was better to have a poor deal than no deal. So now the Commons are they need to verify these. So whatever the government presents, it has to be verified by the Chamber of Commerce. So this is something to consider. The mass is not going to stop. So keep an eye on short positions, selling rallies for the pound against the US dollar. The story is a little bit different. I'm just going to jump directly to the Australian dollar versus the US dollar. Now, we had a correction. I'm going to take this from the 4-hour chart. And I'm just going to take a look. You see, probably you can see it here better. I'm going to go to the Australian dollar. And I'm going to remove the Fibonacci, and let's see where we are. 4-hour looks bullish to me. We're trading above the 50 exponential moving average. 72.09, key player right now, support. Daily chart, still same. We're trading above the 50 exponential moving average, 71.82. So it can drop. It can actually pull back as low as 71.70. It doesn't need to close there, and it can keep going up. So if you take this, we take from the beginning of the upside price action. You see all this, and I wouldn't be surprised. You still have 61.8, 71.30 as entries to buy. So that still makes more attractive short positions. You still have 90 pips to the downside, but rest assured, we're still on buys on the Australian dollar. Also, the New Zealand seems to be having fun as a proxy. If you see that the New Zealand dollar against the US dollar is going up, you also always consider taking a position on the New Zealand against the Japanese yen. And as you can see from previous lows, we are recovering right now almost 500 pips. Very important. The other one that worked very well for the last 3 weeks has been, you see here, yes, 1, 2, 3. 3 weeks has been the euro versus the New Zealand dollar. It's a combination of factors. The New Zealand economy being sort of stable, and of course more weakness on the euro dollar, the euro as a currency. So something to consider. If you're going long New Zealand versus the US dollar, take a look at going long. I'm gonna put it here. Long New Zealand versus Japanese yen, and short euro versus New Zealand dollar. So that sort of will be the trading tip of the day in this video. And last, I still have this fight with the Japanese yen. To me, it looks like if we take this big Fibonacci, trend Fibonacci all the way here, we cannot rule out a pullback to the 112.20. Still, it will really need to close below the 111 level, the round figure, for us to start sort of calling big traction all the way to the 61.8. So still pay attention. I wouldn't rule out this correction. I'm actually short at the moment, so I will still be looking to short this week with a stop loss at 114.10 for the dollar versus the Japanese yen.